So can I ask what your experience was like?
I'm doing SBA loans for my clients. I'm a mortgage broker. So sometimes it's good, some others it was challenging because one of my clients was having that he exceeds the maximum limit of the SBA loan. So I have to convert him to conventional, commercial, something like that, to fit for the program.
Sure.
And this was one of the challenges that it was, for me it was new to know about the SBA loan.
Okay, well, I'm glad you used it. And your experience?
Yeah, mine has been basically attending different seminars, meetings, trainings, but I've never been involved in actually doing the loan, but I understand some.
Okay.
About the SBA, how it works,
All right. Anyone else have some experiences they want to share regarding SBA lending?
I did an SBA loan, but this was like, say about 40 years ago, and so it was, it made you go through a lot of, research and compiling a lot of information, which was good because I needed to have that. So, but I don't remember anything bad or good about it.
Yeah, there's a lot of qualifications criteria that you have to meet,
Right.
so
Right.
hopefully.
So it challenges you to do that. I don't know, I mean, hey, that was a long time ago. I don't know what's changed, better or worse.
Yeah, it's much more streamlined, I think, than in the past. And I've been doing this for 25 years, so I have seen a change in some of the paperwork and trying to get things done more quickly. So that is something to be happy about with the program. So my role is to bring in SBA loans and assess them for eligibility. So that's basically what I would be looking at, and then looking at the credit, of course. But eligibility is the key. So I was given a list of questions, so I wanted to address each one as we go down here. The first was to identify the difference between a conventional loan and an SBA loan.
Oh, what's the difference?
Yeah.
The difference is they have basically government.
That's it.
Yeah, and it's free money. No. That was a joke.
Yes. Okay.
Courtesy of the taxpayers.
Right.
Okay, good.
All right, so on the conventional loans, the lender has incurred 100% of the risk for the default on the loan. So the banker's criteria is much more conservative than you would see in an SBA loan. On an SBA loan, while the lender is the lender of the funds, the SBA will guarantee a portion of the proceeds in the event of a default. Now, part of that is there's a 75% typically guarantee, and I'm going to go over, first let me address the SBA 7A program, and there's also the SBA 504 program, and there's some differences in that too. But with the SBA 7A program, the lender will provide a loan up to 25 years, depending on the use of proceeds. If it's a commercial real estate loan for a refinance or a purchase, it's a 25-year loan. And then if there's other uses of proceeds for the SBA for business acquisitions, partner buyout, working capital, refinance of existing debt, there's any number of uses for the SBA 7A program. So it's in the event of a default, the SBA does not come in and just pay off 75% of the loan. Rather, it's a pro rata, just share between the bank and the SBA, so that it is a partnership. With that 75% guarantee, the lender can be much more aggressive and relaxed on their credit analysis because they've offloaded some of the risk in the event of a default. Part of that would be, for example, for the use of proceeds on commercial real estate. A conventional loan would be more of a 25-year amortization, but with a 10-year call or a 5-year call. With the SBA, the lender can go up to 25 years fully amortized on a commercial real estate refi or purchase. Okay. Any questions?
What's the limit for commercial?
For 5 million. For commercial or conventional or commercial real estate?
Just, yeah.
5 million. And that's combined, so if you have a borrower that has a loan for, say, 3 million, then he could get another loan for 2. So it's cumulative.
Okay, it's not separate.
It's not separate, so it's not each purchase or refinance.
Well, you also have to have a business that's already operating and has some sort of a track record, right?
Actually, you don't have to. With the SBA, conventionally, yes, you would have to have probably 2 years in business, something like that. But with the SBA, we can do startups.
Okay, you can do startups with it, as long as you have a business plan and.
Yes, you would get a business plan and projections and assumptions that make sense, and that would be the analysis. We just did a startup with a restaurant, and he did have experience, that was important, and then he also did get a business plan, and I can go over that a little bit later. So there's a couple programs that provide that service for your borrowers.
That's for a business, but can you also acquire real estate too?
Yes, he acquired real estate for his restaurant,
Okay.
and we also gave him working capital for his business.
That's good.
And also funds for inventory and equipment.
Oh, good, yeah, I had some SBA guy tell me you couldn't do that, I said, I thought it was possible, now you're saying I can, so I like it.
Right, it might depend a little bit on the lender's viewpoint. Some don't really like to do projection-based deals, we do. So,
And that's because the bank is making the loan and the government is guaranteeing it, so you can make decisions that if you went straight through SBA, do they look at it different, or how is that?
No, we're the lender, we're a preferred lender, we do the analysis, we know the SOP inside and out, and so as long as we do our lending according to the SOP, then they'll honor the guarantee. And we're the lender, we make the decision, we analyze the credit, we look at the character of the individual, we can look at where it's on a conventional deal, you probably wouldn't see a bankruptcy, the candidate become a borrower that had a bankruptcy, but with the SBA, because there's an offload of the risk, the lender can, as long as it makes sense with the experiences with the bankruptcy or charge-offs or some other credit issues, we can overlook that as long as it makes sense. We don't look necessarily at the credit score, like a conventional loan would maybe say, you're under 700, you're out. With the SBA, we can look at the score as an indicator of how the credit should look, but we would also look at the underlying issues. Yes,
Do you need personal guarantee
typically yes,
on all SBA loans?
yes. SBA requires personal guarantees.
But how do you evaluate the personal guarantee that are qualified for that?
We have, you'll fill out a personal financial statement, each of our borrowers does, and we make that analysis of whether they have additional collateral, they have equity in a building, equity in a single family residence, or equipment that they can pledge, but to support the guarantee.
Is the guarantee for the length of the loan, or is it for, excuse me, a shorter period of time until they prove themselves?
It's for the length of the loan.
It is, okay.
Yes, it is.
Do you have limitations on the loan if it's the loan dedicated for smoke shops carrying CBD or not?
CBD, as long as it is not, does not have any THC at all in it. It's a very fine line that you have to show
Yeah.
that it is absolutely just the CBD.
Mm.
And at a previous bank I was with, we were able to help a company that did CBD manufacturing of, I think, pipes, or
Yeah,
what they use.
Because
focus, yes,
Right,
that,
things like that. We helped them buy a building, and we were able to do it because
That
there
was
was
the
no.
previous bank?
Mhm, a previous bank.
No, okay.
I don't know, this one, I haven't had the opportunity to look at anything like
No,
that,
no, no.
but that, as long as there's nothing that would cross over.
Yeah, because I faced this concern before from one of my clients that they're looking for a loan to buy a smoke shop, and yeah, this was the challenge to find this acceptable, take a loan for selling CBD or even the supplies of the whole country material, yeah.
Yeah, the supplies.
Yeah,
Yeah, those are usually okay.
yeah,
Yeah.
yeah, good.
Okay.
Thank you. Yeah.
Uh-huh.
What are the current interest rates for SBA loans?
Well, SBA, the 7A program is based on prime, so it's a percentage over prime, and it can be as high as prime plus 2 3/4. Prime's at 8.5 right now, so the max a bank can charge is 2 3/4 over prime on the 7As, and then it's the market that would support or push. The competition would push the rate down, or the spread down or up, whatever the risk is.
Are you able to refinance the loan, like after a certain period of time?
You can refinance the SBA 7A with a conventional product, or if it's for the use of proceeds was for commercial real estate, you can refinance with the SBA 504 program, which I can address in a minute.
What was that? So that'd be about 10%, right? Roughly, roughly 10%? Okay. That's an easy number to figure out.
Right.
Is it oh, no, it's not, it's 25 years amortization, right?
Fully amortized.
Fully amortized.
Right, there's no balloon.
Oh. No prepayment penalty, nothing?
If you have a loan with the SBA that's more than 10 years, then yes, there is a prepayment penalty. It's a 3-year prepayment penalty. It's a declining 5%, 3%, 1%.
Oh.
And that, so if you have a real estate loan, you're gonna have a prepayment penalty.
3 years.
Yeah, so typically the conventional product would have higher prepayment, typically,
Right.
and a call. They could do a 25% amortization, but it's typically a balloon of 5 years or 10 years, depending on the bank that you go to.
Does a refinance trigger a prepayment penalty?
If it's within the 3 years, yes, but you can pay off 20% each year prior. That will not be affected by the balance. We can reduce the balance of what is affected by the prepayment penalty.
I have a question. If someone's guaranteeing a loan with a property, say they're a single family home, are they gonna accrue a lien on the property?
Yes, that is how they secure the property. Yeah, I have that conversation a lot. So, yeah.
So if they get a $2 million loan, do they have to have $2 million worth of equity?
No, and each lender assesses that a little bit differently, but the SBA, you do not have to be 100% collateralized. But if there is available collateral equity and you're not 100% collateralized, the bank is required to take that collateral as collateral for the loan.
Do they put on all your properties, the lien?
Up to what is available and up to 100% collateralization.
Okay.
Do you work directly with mortgage brokers or not, as a bank? Okay,
Yes,
okay, yeah. And the broker gets his fees from the bank or from the borrower?
from the bank,
From the bank, okay,
Mhm.
okay.
yes.
So let me ask you something, I was reading down here on the 3.5% of the guaranteed portion of the loan up to and including 1 million, and 3.75 of the guaranteed portion over 1 million. So if it's a $2 million loan, what was it? The fees would be like,
It would be, 2 million would be 1.45% of the guaranteed amount. So you would take the 75% of the gross loan and times it by either 1.45, whatever the breakdown is right there.
it says 3.75 of the guaranteed portion over 1 million. So that's what I was trying to figure out. Yeah, but it's okay, go
If
ahead.
it's under 1 million, there is no guarantee fee.
Yeah,
That's new. So,
but if it's over 1 million, it's 3.75.
It
Is the
should
guaranteed
be-
portion.
there's a graduation, so there's one that says 1.45. Do you see? Should be right there.
Up to 1 million.
Up to 1 million it's 0, and then there's 1.45 is,
2 and including 1 million.
yes.
I'm just trying to clear it. I understand.
Okay. Yes.
Quick question, so when you have an entity, for example, like if an LLC were to take the note, or say an individual buys it for a business purpose, but then they transfer into the LLC, do you guys call the note, or how does that work? Cause I know some lenders do, so how would that?
No, we would not, but you do have to let the SBA know, let the lender know,
Okay.
and then the SBA can go through, and we would do what's called a servicing action to make sure that LLC is also a guarantor.
Okay, so along with the personal guarantee, you would add the LLC as well, but if they wanted to incorporate for their own personal protection or things
Yes,
like
you
that?
need to let, that borrower needs to let the SBA or their lender know.
No, okay.
And then then they can do the
And they'll
servicing
add the
actions
LLC to the guarantee as well?
to
Okay.
make sure that you don't transfer any kind of the guarantee just to another entity without the lender knowing.
Okay, thanks.
Has that come up?
I mean, I'm an estate planning attorney, so it can come up when there's people that have, you know, like they're concerned about if they change title to their property, not specific to SBA, but just in general.
Mhm.
So I'm just curious if business owners were to come and, you know, they want asset protection, so maybe they're incorporating for that purpose. Want to make sure the lender will call the note, so it's good to know.
Yes, but if it's problematic if they do not, if they change something in their entity formation or do anything like that, they must contact the lender. I advise that for sure.
Okay, thank you.
So, some of the other highlights that an SBA loan can benefit the borrower versus a conventional product. On the collateral, the commercial real estate, the loan can be up to 90% loan to value. So, or if it's a special use property, 85% loan to value. Whereas on a conventional product, they would be at maximum 75% loan to value.
This is on the real estate and the business as well?
This is real estate.
Real estate, not business.
No, not business.
And-
Business is just 100%.
100%.
Yeah, unless you're buying a business, then you're gonna be putting in
The
up to
down payment.
10%, the
Yeah.
down
Okay,
down
yeah.
payment.
Okay.
But I'm just, as far as amount of, that you can borrow against
Mhm.
commercial real
Yeah,
estate,
yeah.
you can leverage it up to 90%.
Mhm.
Can you repeat those LTVs again, please?
Sure, on the commercial real estate for the SBA, you can leverage the up to 90% loan to value. On a general use property, on a specific use property like a gas station, hotel, restaurant, it would be up to 85% loan to value. I went over the term. The term is 25 years for SBA commercial real estate, and 10 years for business acquisition or partner buyout, working capital, debt refinance, typically 10-year loan, fully amortized.
Amortized over what period of time?
10 years,
O- over
fully,
10,
yeah,
okay.
10 years, 10-year term, 10-year amortization. I think I just, credit, time in business. Oh, we talked about, we can look at startups. Or the,
Yeah, 'cause I have a
time
client that
in
basically, he had a business, then he sold his business to his brother, and then wants to restart his whole business up again. But he has experience, so.
Sure, the experience is a big deal. And then they can go, as long as you have a business plan and some projections, assumptions. There's also, and I was gonna address that a little bit later, but there's also organizations that can help for free, have your clients or you work on a business plan, projections, and assumptions. And they do an excellent job, and it is
Who does that?
the SBDC, Small Business Development Corporations.
Oh,
I have one that I highly recommend. It's through Laverne
Very good.
University. Have you used them?
Yes, I run the business partners in my church, and, I have a large group, and I bring them in to talk on different things, and they've been excellent.
Yeah, there's,
They have a lot of services there.
Sean Snyder?
mhm.
yeah, but he's great. And I had a liquor store, and they were buying the liquor store. They had the experience, but they were planning on expanding it. And so they weren't gonna meet their debt service requirements without projections. So I had introduced them to Sean Schneider with SBDC, and he talked with them. They did a beautiful business plan, got the projections and assumptions. We approved the loan. There was some other issues that we didn't end up funding, but it was not because they didn't have an excellent business plan for us. We also did that with a physical therapist. So there's a number of different businesses that these particular organizations help with. As long as, I'm on that subject, there's SCORE, which is Service Corps Retired Executives, and they provide a mentorship for business owners or entrepreneurs that are looking to start a business. They'll also help you with your business plan and exit strategy. They help you with a lot of the legal aspects of your business.
For startup business, how much you could fund and support the startup businesses?
A minimum of 10% of the project cost.
Okay. So
So
you fund with 10%, or the borrower could have to
the borrower brings in 10%.
10%, okay.
Minimum.
Okay.
Yeah, it's up to the lender to make a determination, depending on the risk, or the debt service coverage, whether they're gonna be able to come in with just 10%. They may decide, no, we wanna see 15% or 20%.
so with the interest rate going higher, does it affect that down payment? Like when you do the projection, all the numbers, is it affecting the 10% down? Does it require now more down payment, or? See, like, because right now the interest rate is going higher, right?
Right.
So it's affecting the cash flow projection and all the numbers. Does it now make it more than 10% as a down payment requirement, or?
No, we just, if the projections didn't support the loan at 90, with just 10% down, then yes, we would want to reduce the loan amount so that the projections would be able to service that debt.
So the
But
projection.
very rarely does the projections not service
You got to raise the price.
Even with higher interest rate, it's not affecting the projections.
Jackson will come out.
Yeah, if the projections are very conservative and do not cover the debt service, then yes, we would lower the loan amount by having the borrower bring in more funds. But yes, your answer to is the interest rate affecting how much the borrower can borrow? Yes,
Right.
that comes to the debt service. While SBA, we need to get a debt service coverage of 1.15 times. A conventional loan would be 1.25 or 1.35. So we can be pretty aggressive, almost 1-to-1. But there's a little bit that we need over that.
What's the name of this, the Laverne, is that the, you hook us up with the phone number for them?
I have a website for him, Sean Snyder, at www.
Just a moment, let me.
One year.
So they help with the writing down the feasibility study or something like that?
Mm-hmm.
Okay.
He can help with a lot of that.
Oh, okay.
Okay.
So it's Laverne, sbdc.org.
Laverne, SBC.
SBDC?
Mm-hmm. Small Business Development Corporation. SBDC.
Sean Snyder is his name.
Yes, he's with the university. He's the director of the program at.
What's his name again?
Laverne. Sean Snyder.
Sean?
I just said Sean.
The SBA provides grants for their nonprofit.
Oh, yeah,
And so
okay.
the SBA will provides grants so long as they're giving the advice, and that's why I think they'll be able to give it for free.
Okay, yeah, interesting.
They do provide training as well. That is probably low cost, but
Okay.
that is something that the SBA is very supportive of, is to make sure that there's a lot of guidance for the entrepreneurs and advice. Do you have questions on the 7A program? That's what
Yeah, I
we
have a
focus on, okay?
With broker friendly, is there any maximum compensation, like for referral fee for the brokers, or?
The brokers need to support the amount of the fee by consulting, packaging. They need to actively assist the borrower and help in putting together their package. But it can be it depends on the bank.
Right.
Yeah.
But that broker compensation, does it affect the margin that you
No.
have
No,
to the
it doesn't
index?
impact.
It doesn't affect the margin?
No, it
It's
does
still
not.
the same?
Yes.
Okay.
The margin is based on the quality of the credit
Right.
and the risk analysis. So if it is something like a startup, then we're gonna the bank will probably be at the prime plus 2.75, because it's a very risky loan. If it's more like a commercial real estate loan that there's track record for the business, then the spread is gonna be much lower. Yes,
What are the typical timeframes for processing?
okay. That tends to be bank related. I would say if you can look at 30 to 45 days to get it to funding, that would be what you would be able to consider. Some banks will be up to 60 days. It depends on how quickly we get information from the borrower.
Sure, of course.
But once we can get a full package, it can go very quickly, especially for a preferred lender that knows the SOP, that can just do their underwriting, do their credit analysis, and get going.
So all the ducks in a row, about 30 to 45 should be
I would say
doable
45
to be safe.
is right. That allows for a lot of questions back and forth if there's anything complicated. But I would.
Do you take, excuse me, do you do this for persons who are new to a particular business, have no experience in it?
That is a difficult deal to do. You want to see experience. What can happen is if they don't have experience in the particular industry, they can hire a manager that does, and maybe feed off of that. But that is a difficult one to do.
What kind of experience minimally would they need? A year, 2 years, or depending on the type of business? I
Depending on the
suppose.
type of business, a year would be sufficient.
Good. That's good.
Is there a particular deal that you?
Well, we worked on a deal where the guy really didn't have much experience in running a liquor store. And we never got to the SBA situation with him. I wondered the whole time, he doesn't have this experience, I wondered how he's gonna get his funding. So,
Yeah, he needs to either get a manager or a partner that would be able to be either part of the loan or have some kind of contract that they would stay.
But if his experience is related that he had been working in that industry before or in that business before, this is valid or not? It's considered or not? Salesperson who starts a liquor store.
In a liquor store situation, it's very specific how they do their inventory, and so we would want to see this. It's specific and experience specific to that industry.
Yeah.
If it's something else that is a little bit easier, more generic, then you could cross over some experience in another industry. We can cross that over.
Yeah, pretty true.
Can you use a SBA loan to build, like from the ground up?
Yes, construction. Yes, you just need to, there's certain lenders that do like to do ground up construction, and there are others that don't, so you just need to find the lender that's one of their niches. But yes, absolutely.
Let's say if the broker refer a loan to you, you mentioned, they have to help out with packaging the loan. Let's say this is the first loan they're doing. Are you gonna train the broker how to package it?
Of course, we can
You can do that?
help.
Yeah.
Yes.
Okay.
Yes.
So, just remind me, because I went brain dead right now. So the SBA, they guarantee the loan, so we have to find our own bank to be able to make the application, but SBA guarantees the loan. But SBA will help you they help with a lot of stuff. So am I correct that they just guarantee the loan, but they don't fund the loans?
Right, the lender funds the loan. The lender is the lender. The SBA is just guaranteeing that if there's a default, then they will, as long as the SOP was followed, then they will go ahead and provide 75% of the loan.
Yeah, not all banks will do SBA either.
No,
So you have to find a bank that does do SBA lending.
right.
Right.
Because like she was mentioning, these groups that help, they're awesome. There's another one, the SBDC here in the Inland Empire. If you Google them, they have offices here in Fullerton and Irvine and everything. And these people offer everything you need to be successful, so when you get to her, your package will be, you know what you're doing, especially for startups.
Right.
I mean,
Does SCORE
There's-
offer any workshops on SBA?
Yes, SCORE offers workshops.
And the SCORE in Orange County is nationally recognized as one of the best SCORE units. It's score114.org. And they're one of the best SCORE organizations in the whole country. And I've taken many courses from them, and they're all excellent, they're all free.
Right.
It's
Sorry,
free
what-
You'll
workshops.
find
What
them
is
on the
that? For what? For workshop for what?
SBDC.
They provide free workshops, business related,
Oh,
and they'll even assign you a business person in your particular area to help you, mentor you. So it's an excellent organization. They work closely with the federal government and the state government, and they provide free education.
Oh, interesting.
But for the one-stop shop is what I'm referring to, is that you go to the SBDC,
Yeah.
to the different ones, scores there, one of the services
Yeah.
also,
Right.
in addition to 1,000 other things.
Right.
It's called
Right, that's
114.org or, okay.
Does do banks, are they pre-approved by SBA?
Yes.
Okay, so you have to, that's the list you need to really know, right?
Would
From-
the
from our
banks, if
standpoint.
they're, yes,
Yeah.
if they're a preferred lender, just ask if they're a preferred lender, and if they are, then they know the SOP. And they can make their own, they do their own analysis, they identify whether it's eligible, and then do their own funding.
Do you have a list of the banks you work with right now?
I'm with one bank, I'm with,
Oh, you are the bank?
She doesn't give a list of competitors.
Oh, I thought you were with the government, I was gonna ask you for some money.
She's here promoting SBA for her bank.
I've been doing this for 25 years, and I know it sounds corny, but I'm passionate about how they can help the businesses and the different organizations that can help these entrepreneurs. So if I'm here to discuss the SBA program, so that's my goal today.
Are you local around here? Are you
Um,
close by, or Irvine?
in Irvine,
Oh, that's not too far.
right?
Yeah, she passed out cards earlier,
Yeah,
so
did
if
you
you
get
didn't
one?
get a card, I'm sure she's got more cards.
Oh, yeah.
Did you get this?
Mhm.
Okay.
There you go.
So, so what I've been going through mostly is the SBA 7A program, and that's really the star, because it can cover any kind of use of proceeds. Now, there's also another program called the 504, and it's with certified development companies that are partners with the SBA. That is specific for refinance and purchase of commercial real estate or equipment.
It's called what?
Sit.
What's the name of the other program?
504?
504, okay, yeah, okay.
So with the CDC, do they accept your underwriting or they do their own underwriting?
So with the CDC, they do their own underwriting. The 504 is a combination of a lender, the bank that does 50% loan to value, then the CDC does 40% typically in a second position, and then the borrower puts in 10%. So it's a 50-40-10 scenario.
CDC is what?
Certified Development Company. The Certified Development Company works with the SBA, and the SBA, they do their analysis and then they send it to the SBA, and the SBA does and underwrites them. So that's the second deed of trust.
But how long the loan would take to close,
For the 504,
Yeah.
the loan can take 45, 60 days. The difference with this loan is the second deed of trust is funded with a debenture. And the debenture typically closes after escrow. So a bridge loan is used to close the loan, so that you have the bank doing their first deed of trust, 50%. Then you have your bridge lender that comes in, which also can be the bank, that does the 40%, the second deed of trust, to bridge the loan so that it can close on time with escrow. Then the CDC works with on the securitization of a debenture that funds their loan, and once that's funded, and it's usually 30 to 60 days later, then that loan pays off the bridge loan. So you'll end up with two loans, one with the SBA CDC and one with the bank. Does that, am I making sense?
So
It's a little
who's
complicated.
underwriting Prevail? I mean, let's say the bank approve it, but the CDC doesn't approve the loan. You know, how do they coordinate together?
If the bank, if the CDC doesn't approve the loan, then there's no 504.
No, even bank.
If the CDC doesn't, because the only reason they wouldn't is if the SBA declined it. They do their underwriting, submit it to the SBA, and for whatever reason the SBA declines it, which is typically rare, they'll screen it out with some issues, and then you can come and address them, and then they'll review it again and screen out and have you come and correct whatever issue they have. So it's rare that they'll flat out deny the loan. I mean, it can happen, but then there's no 504 financing without the SBA.
And the CDC is a second position, 40%.
Second position, 40%.
And the bank's 50 and 10 out of it.
And that's for just the generic properties. If there is a specific use property, then it's 40, it's 50, 35, 10, 15. The borrower brings in 15%. It's the same as with the 7A. If there's special use property, there's 15% down payment.
And the bank's still at 50 and CDC's at 35.
Right.
Is there a maximum amount for that one?
A maximum loan amount is $5 million for the CDC portion. So you could actually do a $10 million project because the bank is conventional financing. And then you would leverage the $5 million with the CDC. There's some other programs. There's a green program where 20% of your say on a construction or a tenant improvement situation, as long as I think 20% of the proceeds goes to help with green. Solar's perfect example. Then you can typically do more than 5 million as far for the SBA portion. Are there more questions on the 504?
Do they lend to nonprofits?
No,
No nonprofits.
it has to be for profit.
And non-churches,
No.
not religious, yeah.
No.
That applies to 7A as well.
Yes. Has to be for-profit business. I was asked to comment on grants, and while the SBA it's limited on the grants that they'll provide, they will do a few to for-profit businesses. There's the State Trade Expansion Program, and that's funds for the state to help small businesses with exports. So it's very narrow type of situation. And there's research and development where they'll provide grants for scientific research companies that meet federal requirements. So there's the theme there is federal requirements. That's how they'll support that particular entity. And then they also provide the grants for the SBDCs. And I'm glad you brought that up because Cal State Fullerton every year has brings in the Tri-County SBDC, and they have a
Workshop?
Workshop.
Yeah.
Yes, thank you very much. They have a workshop for just any entrepreneur. They put it out to anyone in the community that needs some help with starting a business, their business plan, or they're in a business, they're having some issues, then this SBDC will come in and help them. So that's usually in March, and it's Cal State Fullerton that puts that together. Very supportive of that community.
What's with that ADIL, when the
Oh, the EIDL loans, okay.
EIDL.
Yeah, that's,
That's another one,
That-
people.
That is one of the rare instances where the SBA is the lender. The EIDL loan is the Economic Injury Disaster Program, and that was it's made directly by the SBA, and it can include nonprofits. Okay.
So, in this economic industry disaster program,
It's for funds that the companies would ordinarily meet their expenses, had it not been for the pandemic or other declared disasters.
in our terms similar to 504 or 78.
On the EIDL loans, those are, I believe,
Kind of like a FEMA,
similar.
yeah, like
They'll-
federal disaster loan,
Mhm.
state disaster.
Yeah,
Yeah.
they're low
rate.
interest,
Yeah.
like 3.75, something like that. Low interest, long term. I think they can go up to 30 years.
And max loan, is there a max on it, or just depending on the case?
Case by case, but I think they'll go up, best to my knowledge, they'll go up to 500,000.
How do you qualify for the loan?
It has to be a situation where there is, like the pandemic impacted your business, and had it not been for the pandemic, you would have been able to meet your operating goals or expenses. And then like an earthquake or other disasters.
Okay, so it's not just pandemic, it's
No,
other
it's
types
not.
of disasters.
No, but that's what the EIDL loan specifically came about, because of the pandemic.
Could be related to the market conditions, if a business are failing to proceed and need a loan to grow further and expand, so might need a loan, this could be applicable or not? If the business are failing to expand or to grow and need a loan, this could be applicable to that, or does not fall under this case?
If it's failing for its own reasons, then it would not necessarily qualify for the
Okay.
EIDL loans.
But if
They're-
that, but if an earthquake is tumbled down, then that would be a reason.
Yes, that would be, yes.
No, disaster, okay, natural disaster.
And that's,
Natural disaster.
something that's outside of their control.
We have
Okay,
to- we
yeah.
knock the
Yes.
building down.
Okay.
Yeah, regarding
Say
the
it
rate,
is.
I mean, the prime plus index, I have seen different
Jail.
index somewhere for different banks.
One meeting, please.
Some are 2.25, some is 2.5, some is 12. What does that determine? What index? I mean, the margin is.
The margin is set by the bank, and it's usually, the analysis is how risky is this loan? So if it's a risky loan, their spread is gonna be higher, so it could be up to 2.75. If it's a very generic, cash flows really well, been in business a number of years, something like that, then you could be looking at something like prime plus 1, prime plus 1.5. So it's a bank determination based on the quality of the credit. And that's, when you interview a bank, then these are the questions that you want to ask them on behalf of your borrower. Are there questions right now? I was gonna go on to, okay.
Can you explain the guarantee fee?
Sure. Can I look at the, So the guarantee fee is based on the guaranteed portion, so it's always 75% of the loan amount. Okay, so that's what these numbers are based on. So for loans with the guaranteed portion and the loan amount under $1 million, there's no guarantee fee right now. Okay, for loans that 1 to 2 million, the guarantee fee is 1.45%.
Is that an upfront fee?
Yes,
And is that
and it
just on
can
the
be
second million?
and
I'm
it can
sorry.
be financed
Is that on the, just on the second million, or is it
on the
both?
full. It's on,
So you don't get a fee for,
if it's a
A
million
million.
and under, there's no fee.
but you pay
But
a
when-
fee if you get 2 million, you don't just pay a fee on the second million?
No,
Okay.
yeah, you pay it on the full amount.
And then there's the loan packaging fee, is that also an upfront fee?
Yes, that's typically, it's typically 2,500, but that's what I was also saying, if you're a consultant or a broker that's assisting the borrower, you can, that can be a fee that they pay, that you put on your invoice and the bank will pay. Okay?
So that would be financed.
Yes, it can be financed. Are there some more questions on the guarantee? It's just a formula, and we can, any of your bankers can help you with that analysis. I was asked to touch on women-owned businesses, what the SBA can do for, what they do on behalf of women. And it's, if you go through the SBA district offices, they're the ones that are really the point of,
Contact?
yes, thank you. The contact point, and while, thank you. While the lender cannot discriminate one way or the other. We can't say, oh, this is a woman-owned business, so we're gonna give them more credit. That's not allowed in lending. But what the office, or the district offices do and the SBA do for the women is they help them with their businesses to maybe qualify for some contracts, some government contracts, help them understand lending in general, can help identify some lenders for them, but this is what the SBA will do on behalf of the women. So there are a couple organizations that will help them with their business plans, how to get one of the programs that the federal government may have contracts for the military, something like that. The women-owned businesses can go to the SBA and get some guidance from them on how to apply for these types of programs. So this is how the SBA helps women in business. Not necessarily the lender makes a determination that, oh, we need to give more weight, because we cannot do that.
I have a good friend who changed his whole business to his wife's ownership so that he could take advantage of all this. Very beneficial.
Yes, there are.
Aren't there programs to benefit minorities too?
Yes, anyone that is underserved with the community, yes,
Right.
and their point of contact would be the SBA district offices as well.
Right.
So
They assist them, as you say, in getting government contracts or things that they might not know about.
getting them, yes, giving them advice and helping them to, or guide them to show how they can be equal in the determination of who gets those contracts.
Right.
That's also true with veterans. The lenders can discriminate one way or the other, but there are some other training programs in the SBA and the district offices that help veterans with a number of programs. And the federal government awards annual portion of contracting dollars for veteran-owned businesses. So if you are a veteran-owned business, then I would highly recommend that you contact the SBA district office and find out all you can about the contracts available for the veteran-owned businesses.
There's a lot of different contracts.
Yes, there's any federal contract, they're gonna help you, they call it equal footing. don't have any more points, unless there's some other points that you want me to discuss, I'm happy to do that.
For, I heard there's some SBA Express loan, like 50,000, 300,000, how does those work?
Those are lines of credit, and the idea is that the lender will put it on a fast track when they say express, but it really is more, it's an analysis, and there's underwriting involved, and it typically is a line of credit, and they're typically up to 350, and now they're up to 500,000.
Funded again by the bank or
The
directly
bank.
by SBA?
The bank funds, it's a
Okay.
bank loan. Thank you for asking.
But they
about that
use the
program.
same underwriting guideline, you have to have income, credit, everything.
Yes,
So why they call it Express?
I know, that is the question.
Yeah, it's
fast.
It's 3 months is six,
It's a
15.
guarantee against your property, so it doesn't matter. It get quicker.
Yeah.
Right.
Is it a higher interest rate?
Yes, typically.
You got that idea from the guys that do hard money loans, I think.
Are there some more questions or experiences that someone wants to share with the
I think
SBA?
I do have one.
Oh, okay.
So let's say that a man owns a business that caters towards helping women. Would that receive some type of special consideration?
Not from a lender, not from the lender's point of view,
Okay,
but I would definitely encourage them to go to the SBA district office,
okay.
and because they would definitely support a business that is helping women as well.
With the SBA, do you provide like pre-qual, pre-approval? Let's say we have a client wants to buy office building. Do you provide that as a SBA lender, pre-approval or pre-qual?
We can provide something that says that they're eligible for SBA financing, but typically, I know we would not give a pre-approval letter. We could give a term sheet based on an initial analysis, but it would never be something that it's a commitment until there's full underwriting
It's called
performed.
term sheet.
A term sheet, yeah.
Okay, I'm just a layman, and this is gonna sound like probably a really stupid question, but, could you use an SVP loan, or SVP or BA loan to say, get a loan to buy a house, call yourself a property management company, and rent out the rooms, and call that, and would that qualify, for a small business? I mean, right, so if you incorporate, you call yourself a property management company, say you buy a small condo somewhere like Rancho Miguel, and you advertise to fill it up, you rent it out, I mean, does that fall underneath? Could you do that?
Property management companies are eligible for SBA financing.
But you would just need like a year of experience, or need to know somebody that's got experience to qualify, correct?
Right.
All right,
Or be associated, like a manager or
Yeah.
a partner.
those are
Well,
details we can
I-
work out later.
I'll tell you like
I just answered my question.
Senior care or something too, senior care.
Yes.
Probably,
The
wouldn't the
skill-
property have to qualify? It's a condo, but to qualify for what he's talking about, it would have to be for licensed board and care or room and board, or you would have to license it, I would think, because if not, everybody would be borrowing to do that.
Well, I mean, that's
Maybe
why,
it's just a thing of-
that's why I said I was a layman.
So you don't have to occupy
I don't even know
51%?
if I have the right
A property,
information, but I don't
a
think so.
property management company by its nature does not occupy the properties.
Right.
That's right.
But if you are a company that's buying a piece of property to get SBA financing, you must occupy 51%. Otherwise, it's an investor property and it's not eligible for SBA program.
So you could live there,
So if it's a
and then
duplex.
rent out the other, because you said you have to occupy 50% of it?
51.
If you're a business buying a property to operate out of, then you need to
Operating 50%.
occupy 51% at least.
But it seems to me that you're just saying, I'm a property manager, don't you have to have
There
some
will-
kind of criteria to be the property manager?
Yes,
So-
I'm saying a property management company is eligible. So you're gonna be supplying your tax returns.
Mhm.
The property management company is gonna be supplying its rental agreements, all of that. So there is an analysis.
So
that'll-
if you live in a 1,600 square foot, the neighbor's 14, you're over 51%.
Yeah, no, I'm just, there's a lot of like interesting things you really could do here, so being a layman, I just thought I'd throw it.
I think we should give Ashley a big
Yeah,
round of
thank
applause.
you.
Thank you.
Leslie,
Thank you for-